New rules for first home buyers are set to boost house prices. The Reserve Bank says the timing of the next interest rate rise is likely to be sooner than it previously thought, and the election campaign gets a little spicier with Scott Morrison and Anthony Albanese trading barbs. It's Wednesday, the 20th of April, 2022. Welcome to Fear and Greed, Australia's most popular business podcast. I'm Michael Thompson, and good morning, Sean Aylmer.
Good morning, Michael.
Sean, interesting chat coming up today. A company that you have talked about a fair bit, Invocare.
Yes, it's a funeral services group. It owns things like Guardian and White Ladies Funerals. They're getting heavy into pet cremations, though. That's kind of their latest income stream. I just love Invocare. It's just a really interesting industry anyway. And the COVID period, people were actually healthier outside COVID. And so in a sense, it didn't have a great COVID period, but it's now trying to find new ways of making money. And pet cremations are the go, Michael.
Yeah, it's a really interesting chat. It's coming up later. That's with Lynn Gallucci from Invocare. I reckon it's the first time we have really done an interview about funerals on Fear and Greed. So
probably. It's not one of those topics that you jump into first time you start chatting to people.
No, it's not, but it is a fascinating sector, and Lynn does a fantastic job of kind of explaining what is happening in that business. So stick around for that one. But Sean, we need to talk about house prices. This is one of my favourite topics, so I'm really glad that we get to talk about it today. First home buyers are going to get much better access to apartments and entry-level houses after the federal government lifted price caps for its housing guarantee scheme.
Yes, and that could put a floor under any house price decreases over the next couple of years. The federal government's home guarantee scheme helps first home buyers purchase the property with a 5% deposit, and they don't need to pay the costly lender's mortgage insurance. Now, under the new rules from July 1, which is supported by both sides of government, the price caps for homes available under the scheme will rise by $100,000 across capital cities and major regional centres, except in the ACT, where it will increase by $250,000.
All right, so what does that mean, though, in dollar terms for home buyers?
Okay, so the price limit in Sydney and large regional centres in New South Wales will jump to $900,000. The price cap will increase to $800,000 in Melbourne and Victoria's major regional centres, goes to about $700,000 across Brisbane and Queensland's main regional areas, and to $750,000 in the ACT. Now, eligible home buyers can purchase a home worth up to $600,000 in Perth, Adelaide, Darwin, and across the state's major regional areas. The whole point behind this is that they don't have to save up for the mortgage insurance, and they only have to save 5% deposit, not the normal 20% deposit, which most banks insist on without mortgage insurance. If the government helps out, it means they can get into the market much earlier.
It's great news for first home buyers, Sean, but what about the rest of the market? Will it actually impact the rest of the property sector?
Well, a few things in that. It might not be great news for first home buyers because previously, when there's been the big first home buyer grants, all that did was push up the price of housing by the amount of the grant. There's a possibility here that that's exactly the same thing that will happen. House prices at that entry level will actually rise. Because the scheme will boost demand at the lower end, that will flow through to most of the market. According to CoreLogic, the price upgrade will qualify 40% of suburbs across the nation in terms of houses, up from 24%. Therefore, a first home buyer, it can look at 40% of the suburbs, much more than it previously could. In terms of apartments, first home buyers will be in the market in 80% of suburbs and centres around the country. That will definitely put upward pressure on prices.
Sean, it seems you really cannot keep the Australian property sector down.
No, it's quite incredible. After a 20% plus rise in prices last year, higher interest rates later this year, all things being equal, should trigger a fall in prices. And it may still happen, but this change in policy will certainly work against drops in house prices.
All right, interesting story. Now, what happened on markets yesterday?
The S&P ASX 200 rose 0.56% to 7,565 points, helped by energy and materials companies mostly. Now, that's the highest level the bourse has been since the very beginning of this year. All the major banks did well. The big miners also outperformed the market. The tech stocks, however, didn't do so well, with REA, WiseTech Global and Xero all falling more than 1%. Biotech Imugene was the best performer of the top 200, rising more than 8%, while waste management group Cleanaway share price jumped 6% on takeover speculation. It was a good day for the gold diggers after the price of the precious metal went through $2,000 an ounce, at least briefly. It came back a bit then. Beach Energy and Ramelius Resources were both up nearly 4%. Chalice Mining rose 3%, while market leader Newcrest Mining finished up 1.5%. Now, Michael, in the fixed income market, big companies have rushed to the bond market to borrow money before interest rates rise too much. Now, just like homeowners last year locked in fixed rate mortgages, and this year people are buying up houses ahead of any rate rises, big businesses are doing exactly the same. In fact, according to figures from investment bank UBS, investment-grade corporate bond issuance reached $1.5 billion last month. Now, that's the most since November. A few other little facts and figures here, Michael, we should just quickly run through. Oil prices have been rising the past few days. The shutdown of Libya's biggest oil field has put further strain on an undersupplied market. Brent crude is currently trading around $113 a barrel. I wouldn't say petrol prices are cheap at the moment, but they are better than what they were, and maybe that won't last. Wall Street and European markets are still weighed down by expectations of bigger than expected rate hikes in the US, and equities in Hong Kong hit a 4-week low yesterday, with the tech sector hit hard after China banned the live streaming of unauthorised video games. Yet another crackdown out of Beijing. Finally, Michael, the Aussie dollar is worth about 73.8 US cents.
Unauthorised video games. What do you reckon constitutes an unauthorised video game in China?
Not where you're going. That's what I'd like to say. Not where you're going.
All right. No, let's leave that one alone, shall we, Sean? We'll be back in a moment with the rest of the day's business news. Sean, about once a month, I'm very grateful to be working with you. Oh, actually, I'm grateful more often than that to be working with you. But really, once a month, it is very apparent how lucky I am to work with you, because you're very happy to sift through the minutes of the Reserve Bank board meeting, which was held 2 weeks ago, to see what we need to know about. And the latest set of minutes show that the central bank is actively considering bringing forward interest rate hikes.
I can't believe that you don't do it yourself.
No, I'm happy to. I'll investigate those unauthorised video games. You focus on the Reserve Bank board minutes.
That's more me. Look, the minutes say that inflation had picked up and was expected to rise more, with measures of underlying inflation in the March quarter expected to be above 3%. Remember, that would be beyond the bank's target level. The board also commented that wages growth had picked up, but overall had been below rates likely to be consistent with inflation being sustainably at the target. And the minutes said the effects of rising flood and fuel costs were expected to fall unevenly across households. And then, Michael, the money sentence, and I quote, "These developments have brought forward the likely timing of the first increase in interest rates." Now, look, the central bank will look hard at inflation and labour costs in the coming months. The wage price index is due for release in about 4 weeks' time. That's just before the election. If that shows wage costs are rising significantly, then a rate rise in June is expected. That would be about 2 weeks after the election.
All right. Now, onto the election campaign. And as we mentioned at the start of the show, it's starting to get a little bit spicy now. Prime Minister Scott Morrison denounced as a despicable lie Labor claims that the coalition is planning to force old age pensioners onto a cashless debit card to access their benefits.
Yes, that one certainly riled him. You know, in every election campaign, there's rumours and innuendo, and that one's come out. Remember the Mediscare campaign? That was another one which really hurt Labor last time around. Well, the whole idea of debit cards for pensioners is one that no one likes, and Mr Morrison was not happy yesterday. He also ruled out doing any deals with independent MPs in order to form government. There was some friendly fire, though, for the Libs, with New South Wales Liberal Treasurer Matt Keane saying the candidate for Warringah on Sydney's Northern Beaches, Catherine Deves, was not fit for office over comments about transgender issues. Morrison again backed the candidate. He can't really do much more than that. However, it's a real mess for the Libs, that one. One serious policy issue that did get a run yesterday was Morrison's promise to extend the life of employer union deals for major projects. At the moment, the maximum term of any deal is 4 years, but the resource companies want it much longer than that, and Morrison said it will go to 6 years. Meanwhile, opposition leader Anthony Albanese was pushing his party's climate policies. Labor also dismissed coalition claims that its policy would raise power prices by $560 annually. There's another one of those rumours. Albanese was also spruiking his team's disaster relief program and said media reports that former Prime Minister Kevin Rudd would be appointed Australia's next ambassador to Washington were wrong. There you go. What I did like about yesterday, though, Michael, was that both leaders just got a little bit tougher. We've seen Morrison go harder. We haven't seen that so much from Albanese, but he was much more aggressive yesterday. If we have 4 more weeks of last week's election campaign, which was all pretty pleasant, it's going to be mighty boring. So I'm calling on both of them to take aim. Go for it.
Get in the ring. Here we go. Make it an exciting 5 weeks coming up. I'm with you on that one, Sean. And Monday, Sean, was Australia's biggest electoral enrolment day ever.
Yes, 214,000 applications to vote were submitted to the Australian Electoral Commission, meaning about 17.2 million Australians are now enrolled to vote on May 21. That's about 96% of eligible voters. The majority of people who enrolled in the few days before Monday's cutoff were 18 to 24 years old. I think it's great that people are going to vote.
Yeah, absolutely right. Now, Sean, the US government will lend up to $145 million to Sierra Resources to help secure battery-grade graphite. This is an interesting one.
It is. Sierra's share price jumped more than 14% yesterday after the deal was announced. Now, it's yet another example of an Australian miner having a commodity high in demand in an increasingly electric world. Now, this time that commodity is natural graphite, which is used in electronics, though the asset itself isn't in Australia. Sierra is listed on the ASX, but the main asset is in Mozambique, where it owns the world's largest graphite resource. The point of this tale is that there are several ASX-listed miners who have done very, very well out of the geopolitics that's running around at the moment, and the fact that economies like the US want to secure their own resources, including graphite and lithium, those sorts of things, so that they don't rely on China.
Now, it feels like a very long time since we've been able to say this, Sean, but COVID cases are trending the right way.
Yeah, Michael, in fact, we haven't really spoken about COVID since the middle of last week. That's great news, don't you think?
Yeah, it really is, actually.
Once it drops off the radar, I mean, there's still 39,000 new cases every day, far, far too many, but in all states, the trend is down. Now, New South Wales had 11,000 cases yesterday and Victoria had 9,000 cases. Unfortunately, there were 18 deaths. Undoubtedly, though, in all states, COVID cases have peaked. The most pronounced downturn is in New South Wales, which, of course, was hardest hit during the most recent outbreak.
Sean, a few quick stories to run through. Incitec Pivot finally got its ammonia plant in Louisiana up and running again.
Yes, it's been operating at partial capacity for 2 months after the release of hydrogen from the plant, inadvertent release of hydrogen from the plant. This has now been resolved, but the group said the cost of the downtime was approximately 170 million Aussie dollars. Incredible. Yesterday, Incitec Pivot's share price rose nearly 4%.
Sean, billionaire trucking magnate Lindsay Fox has donated $100 million to the National Gallery of Victoria.
It's for the construction of the NGV Contemporary as part of the new Melbourne Arts Precinct. It's the largest gift for a capital program to an art museum by a living donor. Very, very generous. Now, when asked why, Lindsay Fox said, because his wife made him do it.
Really?
Yes. I mean, they're great patrons of the arts and, I'm hoping it was tongue-in-cheek with Lindsay Fox, but they are great philanthropists all around, and certainly his wife is a great supporter of the arts.
He's a bit of a character too, isn't he? And clearly,
he's great.
He's great. You can see that coming through there. Now, Sean, AMP has confirmed media reports that it's in talks with multiple parties over the future sale of its private markets business.
Yes, this was in the media over the weekend. The businesses include real estate and infrastructure funds. AMP said the discussions were ongoing. Their outcome will determine if the group demerges the business and lists it as Collimate Capital on the ASX or, in turn, sells them.
And finally, wealth platform Premium's share price jumped 15% yesterday.
It announced an 82% jump in net inflows in the 3 months to the end of March. Pretty good by any measure. And its CEO said things continued to grow strongly. Now, Hub24, another wealth platform, also announced a jump in net inflows, up 36%. That triggered a 1.6% rally in its share price.
All right, moving on to overseas news. And Ukrainian President Volodymyr Zelensky said Russian forces have begun a new campaign to conquer the Donbass region in the east of his country.
Yes, that's where the fighting is most intense at the moment. The remaining defenders of Mariupol were encircled by the Kremlin's forces yesterday, but they haven't surrendered that key port city in the south of the country. Meanwhile, the US is looking to re-establish a diplomatic presence in Ukraine, and Russian President Vladimir Putin asserted the economic blitzkrieg of international sanctions on Russia had failed, citing the recovery in the ruble to pre-war levels. That's true. He didn't mention that he'd actually put controls in place to stop people selling the ruble. So there you go.
Now, Sean, most of the big banks in the US have now reported, and all in all, it was a bit underwhelming.
Yeah, it was. It's sort of important for Australian investors too, because our banks aren't exactly apples with apples here, but they certainly follow similar trends. Now, JP Morgan Chase, Citigroup, Wells Fargo, Goldman Sachs, Morgan Stanley and Bank of America all reported earnings over the past week. It was supposed to be the March quarter, when they returned to normal, but apart from Bank of America, all of them reported lower revenue and all of them reported lower earnings. It doesn't augur that well for the local banks.
And Sean, we have to mention this one. French President Emmanuel Macron is bearing all, sort of.
Have you seen the pictures?
I have, and I was hoping that you'd be okay with talking about it today, because it sets a rather dangerous precedent, doesn't it?
It does. Look, he's in a runoff election for the French presidency this weekend against far-right candidate Marine Le Pen. The gap between the two is widening. He's now 10 points ahead, according to polls. Certainly his favourite to win. But in the last 48 hours, he's released sort of candid pictures, or the campaign has released candid pictures of the French leader. Now, give him his due. He's very good looking and he's quite a dynamic individual. But did we really need to see the very, very hairy chest while he was seated on the couch, 4 shirt buttons undone? I don't think so. ScoMo, elbow, get no ideas. Mind you, Tony Abbott did do the whole budgie smuggler thing, Michael.
Yes, he did. Can you imagine the photo shoot? Because I know they're candid pictures, but there would have still been someone going, look, I don't think 2 buttons is enough. Can you just undo 2 more and then we'll take the photo? And him going, yep, sure.
I reckon he went straight to 5 and they went, perhaps that's 1 too many. Bring it up 1.
We go to some strange places on this podcast, don't we, Sean?
We do. Let's get out of here.
All right. Now, up next is the Fear and Greed Daily interview, and today you're speaking to Lynn Gallucci from InvoCare.
Yes, we mentioned this at the top of the show. Great chat about a really, really interesting sector of the economy.
All right, that's up next in the Fear and Greed playlist on your podcast platform or at fearandgreed.com.au. Thank you, Sean.
Thank you, Michael.
It's Wednesday, the 20th of April, 2022. Make sure you're following the podcast. Join us online on LinkedIn, Twitter, and Facebook. And don't forget to search for our weekly podcast called Safe Word by Fear and Greed. You've got to search for that whole thing, Safe Word by Fear and Greed. There is a new episode out tomorrow. So search for that and hit follow and you'll get it directly to your playlist. I'm Michael Thompson, and that was Fear and Greed. Have a great day.